Hey, welcome to the Closing Beat, everybody. Happy Monday to you. How you been out there? Good to be back. Welcome. The house process for me is all done. Still haven't got the money yet, but that should be tomorrow. But I'm here. I'm back. Everything's great. Life was like chaotic for a while there, and all is good now. So welcome to the Closing Beat. We are financial advisors here at Jazz Wealth. Happy to be back, and we will actually be on the road this week. We'll be in Texas, so we'll be in Houston on Friday, and we'll be in San Antonio on Saturday. So if you're in the area, we'll be at the Alamo Dome, and then in Houston, it's a college. I forget where it's at. But we'll be there. If you want to come hang out, we'll have some meetup places for you there as well. Also, if you want tickets to the San Antonio show, we happen to have some. Just go over to Haley's channel, the Doe Straight channel, and actually just subscribe. It'd be really nice if you'd subscribe there. Leave a comment, and we'll reach out to you and see if we can get you some tickets if you happen to be a drum corps fan and want to go participate there. Anyways, we got a vice president, right? Is that right? So I want to just show this real quick, because we had a game way back. We all guessed in the office who might be the vice president, and it turns out none of us won, right?
Pretty obvious. Yeah, I mean, it feels like we probably should have gotten an obvious pick there, but yeah, nobody, we don't have a winner on our board.
We decided Kevin was the closest, but the guy's not older.
39.
I mean, that's not old, you know?
It's not older either.
But hey, yeah, J.D. Vance, right? Going to be the vice president.
Very political name. That's all I know about him.
Yeah, there you go. Well, so that's that one there. We're going to go with a tie, a wash there that nobody won. Chris was pretty close, but none the least. Anyways, let's go over the stock market here, and we've got some things to teach you here today, because that's what we like to do here. We're like the only advisors that can talk about the stock market and teach you about it at the same time. We're going to start with the S&P 500. Ta-da! Hey, it still works. So the S&P 500, check this out. And I talked about this in the Notes from Jazz. So if you're a client, you want to check this out. Of course, it's in the Notes from Jazz. But over the last 3 months, the S&P is up about 480 points. It was basically an average day, right? We fell a little bit there, but not a big deal. Of the 480 points during this last 3-month little rally, about 300 of those points come from the Magnificent Seven. Right? Big deal. Magnificent Seven stocks there. So we really want to analyze the Magnificent Seven. They are a huge contributor to the gains, and so if they are showing some sign of weakness or maybe getting weaker, then we want to know that ahead of time. We want to analyze that as best as possible. Now, in the Notes from Jazz, we actually talked about this one here. A little bit geeky, but the Magnificent Seven is considered quite overbought, right? And so if they fall, that's also going to pull back the market as well. And what are we doing? Oh, I'm a little powerful there. All right, no problem. I appreciate that. Well, tech support. So on the chart, what you're seeing is, as a whole, we took their distance from the 50-day moving average, and we made that essentially an index here so you could see it. So as a whole, they remain over 2 standard deviations away from their 50-day moving average. It's just a fancy way of saying it's really far from its 50-day, or the blue line on my charts when you look at them. Well, that is, it's not a good sign, right? And so when we look at that and go, okay, well, are we buyers of that? Is that going to keep going? Is it somehow going to go 3 standard deviations? No, it doesn't do that. It doesn't mean it has to fall, but it means that at this point in time, there's going to be less buyers interested, because the people that have the money, they can't go to their bosses and say, I paid way more than what the average was in the short term, but don't worry, it'll be fine. Imagine you join us here at Jazz. You give us a bunch of money in your IRA, or you do whatever, and I just go swinging into the Magnificent Seven and saying, oh, don't worry, I paid a lot for this. You know, it'll probably be fine, though. Give it time, you know. That's a horrible answer. So that is what's caused the actual market now, and this is just a fun way of looking at the entire market. I color-coded it for you. The entire market being overbought as well, about 1.9 times or 1.9 standard deviations above its 50-day. And so we have an overbought market driven by the overbought Magnificent Seven there. And we say, all right, so is this a time that we want to buy? Do we want to be like really aggressive here? Imagine real quick that this is a simple chart of the price of a truck, okay? And you're looking at it and you're like, well, I mean, this line right here, this is about average, so I got a fair deal. This would be a little expensive, and then anything in the dark red there would be you just paid whatever they told you to pay. You know what I mean? Imagine that. This is the same thing. We spend our money in the market hoping for a return. We spend our money on a truck. We spend our money investing in businesses and things like that. Well, we want to get a better deal. So the point of that is if you look at this and you look at this, the Magnificent Seven that's actually controlling everything that's happening, or most of what's happening, are you a buyer? Is this your moment? You ready to strike here? I don't think so, right? It makes it really tough to do anything. Now, the good news is we're in the middle of the summer. You're probably not paying attention anyways because you're on vacation and going on cruises, apparently. Everybody's going on cruises. So that's kind of the broad scope of things and where we're at. I wanted to start with that because it has been a while since we've covered things like that. Now, in the short term, let's go over here. In the short term, really short term, your most overbought sectors in the market. If you're one of those, likes to look sector, what's going to be real estate? That is the most overbought. Actually, today it was middle of the line. Didn't really do a whole lot because it's so overbought. Who wants to pay in the short term that price? They're willing to wait and sit back and see what happens. Then you have consumer discretionary. Well, that didn't work. Consumer discretionary here being the second most overbought, and you can see the weight being put on that sector right now is, well, the short-term people take their profits, and then the people waiting are saying, I'll just sit back down here somewhere, and maybe I'll kind of scoop into this thing then. And then the last one is financials, and this is sort of normal because the financials are first to report their earnings. So we have a lot of earnings, and so far not too bad from them. So that's caused a bit of a short-term pop in the financials there. Today, as far as the stock market goes, Apple was your biggest contributor to the gains here today. And that was really just the news that in India, their total sales were just past $8 billion, right? It's good for them. Great. But again, you can see one of the Magnificent Seven stocks. There's the blue line. How far are we away from the blue line? I know it sounds like this is really elementary, but it's just a fun, simple way to look at it. How far are we? We are very, very far away, over 2 standard deviations away from the 50-day. Does Apple like to be up there? If you were to just scroll back in time and go, well, how often does that happen? No, it doesn't happen that often. It likes to take a break when it gets its excitement, or whatever you want to call it there. All right, looking over, let's do the Dow. So the Dow is up about 2.5% month to date. So far, it's just slightly above average. I say it's just slightly above average because I put this in the notes from Jazz. Usually I'll do it this week. We look at this and say, well, over the last 20 years, 80% of the time, the Dow has been positive in the month of July. Its average gain is 2.09%. We're just a little bit ahead of that. Okay, so if the Dow fell, it still would be average. It wouldn't be anything crazy. If you look over the last 50 years, it's a little less popular at 64% of the time and only 1.15%. And if you take the 100-year lifespan, or 100 years of the Dow, positive 67% of the time, 2/3 of the time, and only 1.73%. So all of that would tell you, hey, now we're just a little bit past the average. Doesn't mean we can't beat the average. It just means for the moment we're a little past that. And that's another way of saying, do you want to be a buyer here? Maybe not. I don't know. Maybe you just enjoy the ride. It's summertime. Hang out. Okay, if we look over at the Russell 2000, easily the best today. It's the best over the last couple days, up more than 1% now for 4 days in a row. That's only happened 14 other times, by the way. And it's up almost 8% in the last 5 days. Why is that? What's going on over there? Is this the start of a new rally that's going to look like Bitcoin and everybody's going to chase it? Probably not. However, the Russell 2000 and really even the micro cap stocks too, if you want to go down to that level, severe underperformers. Russell 2000 still about 10% away from highs. Micro caps, I believe, are about 24% away from highs still. You could use, you could use the IWC for that, right? So that's an ETF that's only tracking the micro caps, so small caps and micro caps. Anyways, the point of the story being the Russell 2000 and these small cap or value type stocks are getting more attention because, well, the Fed keeps telling us, hey, we're feeling pretty good about this. The economy is tightening, but not too much, and that's what we want. So maybe we can be a little looser with our monetary policy, which is just a fancy way of saying we could maybe cut rates. Probably not in July, but in September. Now, they have this fun thing going on here. So inflation, the number, is really volatile, right? And it's just because it's usually such a small number. So small changes equal a bigger percentage change, and it looks like it's more volatile. So the struggle here is, hey, we'll probably wait till September. Well, if they cut in September, we're going to get an inflation number. What if that number spikes real quick? Well, they're going to have a hard time explaining why they're still cutting in September if inflation just popped up a little bit or had some bigger, volatile move there. But if they cut in July, they're saying, well, we said it was kind of close enough, and yeah, whatever, we'll just cut now. So there's a really tricky thing there. They probably won't cut in July, but now people are expecting, I believe, 1.5 rate cuts this year. 2.5 rate cuts so far this year, or they're expecting it this year. Okay, so that's the market and where we stand. What else is going on? We have earnings season. What do you do with earnings season? Well, you have a bunch of stocks, and some of them have great earnings, bad earnings. Hopefully, most of those had good earnings and good responses to the earnings report. But a lot of you like to use options, either to hedge your portfolios or to take shorter-term trades and things like that. What I'm about to go over with you is not a recommendation. It's a simple scan. All I'm doing is just scanning and going, hey, what's happening? Let's take a look. So the options market for this week, just this week, suggests that the average stock that we'll report this week will have a gain or loss of 5.1%. It's just looking at the straddle of the stocks that are reporting this week, really. That's all we did. So you go, okay, well, that's a pretty big move, 5.1%. So do you want to participate in that and take a guess? Or do you want to look at stocks that maybe they don't have earnings coming up, but they're still a good vehicle for selling a covered call, selling a naked put, selling a naked call, whatever it is that your fancy is? What is it that gives you the best yield for not playing along with earnings, right? So let's take a look. Nope, that's not where I want to go. I want to go over here. So a quick overview of what has been the better outperformer. And when we say outperform, we're talking outperform the stock market. Dustin, you can't outperform the stock market. Yes, you can. I'm going to show it. So obviously, in black here, we have selling out of the money puts going down 10% from the current price of the stock and saying, okay, what's the strike price that's closest there? And if I sold a 10% out of the money put, would I outperform? And if so, by how much? So anything above central here is showing that you're outperforming the S&P. And then in basis points or points, so like 0.40%, 0.60%. Just basis points are what people say, or bips if you want to sound fancy. So obviously selling puts has been more profitable and more of an outperformer. Why is that? The market, it's going up, right? You sell a put and the market runs away, or the stock runs away from your put, you make a little money on that premium, right? So we took a look at that and we said, okay, well, great. We have outperformance, even a little outperformance in selling calls right now, and that's only because why? We're in the summertime. We don't have these rip-roaring moves in the stock market because it's lower volume, less participation, people on summer break and taking some time off. You get how we're playing along there. So what we did is we said, let's look at, and I did not change the top of that, I'm sorry, so we can just delete that. We looked at the top 30 stocks here, and we said, what I want to look for is, and I'm scanning, I'm not suggesting, please, I have to say that, or SEC's getting a little picky these days. So it's just a scan, but what we're looking for, what stocks would have the highest yield for selling said covered call and would not interfere with earnings. We do not want the surprise of earnings happening while you have sold this covered call and you wake up and it's 5% higher than you expected, or 10 or 5% lower, right? So if you look around here, here's what we got. The top at the list is going to be the highest percentage premium that you can get by selling a covered call or whatever you decide to do. So we got MongoDB, we know the price here, market cap just for fun. Volatility, just to show that the volatility is a little bit higher than average. I could have done better there, I'm sorry. We know that the next earnings date is after the August expiration, so no issues there. We're looking at the strike price going 10%, I'm sorry, in this case going 11% out of the money. Well, you can see it there. We're saying, well, what's about the premium you're going to get, and what would be the yield, the premium yield, for doing this covered call? Versus just picking a stock and saying, well, hey, he just showed Apple a second ago. That's up there. What if I just sell a call here? Well, you could, but what about earnings, right? Remember, the criteria was we don't want to deal with earnings. So if we go back here, basically, I just wanted to give you a list of things you could look at, or if you own the stock already and you're willing to sell a call against the stock, well, here's where you get the highest percentage premium yield at the best possible strike price so that you can, hopefully make a little bit more money. Estee Lauder, CrowdStrike, Zscaler, Carnival's on there, Broadcom, Williams-Sonoma, Walgreens, etc. A lot of names maybe you're familiar with. that will not have earnings coming up. So there you go. Just a fun way to bounce around and try something different for the first time being back, because in the Notes from Jazz, I'm like, I'm feeling geeky. We're doing some stuff. It's been a while. I'm happy to be back. Thank you, by the way, to all of you who wanted us back. And Cody had a good point. If you want us back so bad, tell your friends. Right? Just go tell a friend, hey, watch the show. Subscribe. Okay, moving on. Anyways, just a few other, we kind of covered some stocks in there. Let's go over some stocks in the news. You might notice JP Morgan here today. Banking fees for JP Morgan up 52%. You can bet old Elizabeth Warren's going to have something to say about that. I'd also point out Citigroup up 63%, totally killing it over there. Net interest income missed on both of those. And if you're not familiar, you see it on TV, but net interest income is just the spread between what it costs them to hold the money and what they charge you to borrow the money, right? And then they factor in the money market accounts and things like that as well. But a really simple explanation is just, hey, it cost me 2% to go get the money, or whatever the percentage is. I'm going to loan it to you for 6%. There's a spread of 4, right? So times everybody that's borrowing money and doing whatever they do. It's a big deal because it's a big part of their, well, they're a bank, right? It's a big part of their business. Wells Fargo, they missed on earnings there, and they missed by like $1 billion, by the way, compared to last year anyways. And they expect their net interest income is going to fall by about 8%. So if that's a big part of their business, and we expect that to go down, it's a really simple way to analyze the financials without spending a lot of time if you don't want to. You got Alphabet in the news there. They're buying a cybersecurity firm. It is, I believe, their biggest deal ever. We're talking like $23 billion or something. Hope that's worth it. You got Meta here in the news there. They're, the whole Trump thing. Kind of interesting to see. Not interesting, but man, that's shocking, right? They're going to ease the restrictions on the on Trump's Facebook platform, Instagram, and things like that. Not really a stock mover. It was more of a news kind of thing to talk about today, because if you just look at the Google searches for Trump, based on what happened, there's obviously a big media drive for that. You got NVIDIA in the news there. The French government's launching a antitrust investigation into them. Not really a stock mover. They also had a conference with some of the larger analysts out there talking about how much they're going to be spending, CapEx, to keep up this growth that they're on. And it's a lot of spending, right? The spending is starting to go parabolic. And now people are going, oh, okay, so you were just ahead of the game. Now you got to spend even more to stay ahead of the game? Well, what does that do? Lower earnings, unless you can have greater and greater sales, but I don't know. And then Snowflake, AT&T, obviously putting all the blame on them there. The data breach, it was a couple of years ago. It's not like new or anything. Barron's came out with an article, said these guys have a whole lot more problems than just that. I thought it was fascinating that the data breach got your call histories and your text logs. So does that make anybody nervous out there? No? Okay. Coming up, we got Bank of America, Morgan Stanley, PNC. It's a whole banking earnings season. That's how it always starts. Banks get everything kicked off. State Street, Schwab, Interactive Brokers. And then outside of that, you've got United Healthcare and JB Hunt will be reporting. And you have tomorrow, you also have a Fed governor speaking. The name's not coming to me. There was one today. There's one tomorrow. They're just going to keep talking about this inflation thing. If you have any questions, I'd be happy to try to answer your questions. I know it's early. We shuck you with the different time here, but I just thought I'd, make a splash. Come on back. Happy to be here. All is good. I'm back, man. Serby says inflation is up at the grocery store this past month. Don't know where the government's getting their data from. There's a fascinating study about that. So I'm not a conspiracy guy. You can look this up. But they swap out the things that they put in that portion of the inflation study. So we could be, maybe cat food is up one. They will take that out, put dog food in there. Dog food didn't go up as much. That happens. And we're all just fine with it. Yeah. Bill's early today. Glad I finally found a box or a bridge to live under. Yeah, me too. It's tough living down here. You know what I mean? It's tough living, but I'm good. It's all it's done. I just think I'm homeless. I literally had a client ask that. Hey, opinions on Celsius. Okay. Been oversold. I think today was a flush out, big down news. Any big volume there? Well, you did have the volume, so that's good. And you're going to have the technical analysis people getting all kinds of excited about a high volume move down to what's called major support. And major support is just the prior lows down in here. There's a lot more to it, but that's the gist of it. Major lows that were also coincided with higher volume. And so you may be getting close. The question would be, if you were to say, oh, I like this, I'd pay $50 for it. How long until this thing turns around? You know what I mean? Like, with this big of a decline, basically a 50% shave in the price of the stock, or not basically, an actual 50% decline in the stock, do you just think people get over it and they go, yay, it's worth $75 again? I don't know about that. That seems like a little bit of a tough one there today. Yeah. Nike and Starbucks, time to do an oversold graph. I'm not sure what you mean by do an oversold graph. You like these stuff. You're looking for these types of things. Yeah, there's no arguing that since Nike had their earnings, go back and look what they said. That was not pretty. There's a lot of competition these days. So since then, there has been every adjustment possible on price. Analysts are coming down. They're just trying to find the reason why this thing should be worth more. It's just not there right now. So you got to think short term if you're looking at it that way. How is it a long-term investment here? Like, I'm not saying it's not a good deal, right? But like, how do you say, I'm going to put some dollars to work? And anytime you put dollars to work, you expect them to do something for you, right? You don't expect them to sit and flounder and just, well, at least I'm in, I got a good price. No, we want a return. So always look at that side. Even though it's discounted, am I getting in and expecting a return right away? Or might there be some time where this chops around and people kind of reprice everything and digest where things should be there? Yeah. Tom, hey, Dustin, do you think the Fed cuts rates this year? I do. I just don't know if it's July or September. I mentioned that a second ago. I think it's an interesting conundrum, which they'll find some way to get out of it. But my best bet would be September. There'll be nothing after that, or there'll be nothing leading up to the election meeting that they have, the meeting they have around the elections. But I don't think it's July. Why? If we're tightening, but we're not to the goals, and we're tightening at a pace that they're comfortable with, maybe they let it ride. I'm glad I don't have to make that decision. I'll tell you that much. All right. So I'm glad to be back. Thank you for your patience and everything. Thanks for the support, by the way. It's pretty cool. If you're going to be in Texas, particularly Houston or San Antonio, we will have meetup spots tomorrow. So we'll do a little slide or something wherever the Jazz team is going to be. Likely very close to the Alamo Dome in San Antonio, and whatever the other school was. I will have that for you tomorrow. Like, subscribe, all that happy stuff. We'll be back tomorrow to do this all over again, and I appreciate you guys being here. See you.